Ports, though. In fact, not just Adani Ports, most of the Adani Group companies, they're the ones which are languishing. Remember, Deloitte Haskins and Sells had tendered their resignation, and MSK and Associates has now been appointed as the new auditor on Adani Ports, and that's been weighing heavy, even though those stocks too have recovered from the session lows, one must admit. So let's quickly take it across to our chartists and find out what is it that they're making of the trading move right now. Kunal, good bit of recovery from those sub 19,300 levels, but can it sustain?
Yeah, it seems like it should sustain because this is the second time we've seen the index bouncing off from that 19,300 mark. The previous attempt or the previous time we bounced off by I think 250 points or the 350 points, 19,300 to 19,645, 47. This was the high the index had made, and this time around, we've just bounced off by at least 100 points so far on the index, which means that there should be more room of at least another 200 to 50 points on the upside for the index. And the banking index is the one which is I think recovering quite smartly. We've seen the bank Nifty recovering more than I think 250, 300 points. I think that's the most important sector or the index to watch out for, because bank Nifty has been a big underperformer. So if the underperforming sector manages to start to show signs of recovery, then I think maybe the pain could be out of the indices in terms of the short-term correction. So 19,300 mark acting as a strong support, as well as banking index, that's the more important index to watch out for.
Oh, well, yes. And of course, India VIX too has moved high by almost 5-6% on an intraday basis. And apart from banks, it's Reliance too, which is showing a solid recovery. In fact, that stock is up around 1.1%. And that individually is supporting a lot at the index level. Nooresh, what's your view on the banking index as Kunal was talking about, and even on Reliance?
So starting off with the banking index, the banks corrected a lot more than the index. We managed to break below the 44,000 mark also, but have recovered. And the fact is, if you look at most of the heavyweights are now back to supports. We are at 1750, 1800 for Kotak Mahindra Bank. We are at 1600 levels for HDFC Bank. HDFC Bank is the largest weight. Then you have ICICI Bank, almost the same weight, which is also at a support of 950, 960, which is where it had a previous top. So out here, we are at a zone where one should be looking for reversals. Like I said in the morning, would be looking at a buy on Nifty. And the target price for this move should be closer to 19,500, 550. And now the trailing stop losses shift to 19,300. So if we hold above 19,300, we get back into the same range, wherein we go towards 19,500, 550. And the upper band remains at 19,650, 700. We are still in the range after today's recovery. Reliance Industries is the interesting one, recommended in the morning as well. Now, if you look at the stock price, it has crossed the last 10-12 days highs. And also, if we adjust it for that 200, 250 rupees of Geo Finance, the previous all-time high for the stock was 2850. And today we are at closer to 2550 to 2580 levels. So if we can sustain about 2600, 2650 levels, that would be a multi-year breakout on an adjusted basis. So watching for that one, as of now, expected to test that 2650 mark, and then we'll again review.
Right. Okay. That's the take coming in on what some of the individual stocks as well are indicating. Let me take the conversation forward. Andrew Holland as well joins in on the show right now. Andrew, many are questioning the market right now on whether or not it's getting overheated. Sure enough, some of the froth has definitely come off from the top. But do you think there is still a meaningful correction in store, or this is just a temporary blip that one has seen and maybe the worst of it got over, last week?
Yeah, no, I'm not sure that the worst of it's over yet, but it is a temporary blip in terms of the market fall. We got to very much overbought conditions, and we've had a few factors to help bring the market down. But I think what's going to continue to drag the market is going to be the banking sector, because after the RBI policy last week, which in some respects you could say his speech was a little bit more dovish, but his actions were more hawkish. You've had effectively nearly a kind of a rate hike with the increase in CRR that he did. And this is a time when the banks are all chasing deposits. So it's going to be highly competitive. We've seen that the rupee hit 83, 10-year bond yields at 7.2. So everything's kind of working against the market at the moment. And of course, with the news that the monsoons are a little bit below expectations, and we still have El Nino to kind of play out yet at the back end of this month into September. Those are the factors which I think the market's just kind of, I'm not saying ignoring, but hoping for the best. but maybe the banking sector is telling us that that's not the case at the moment. So I don't think we're out of the woods yet. I wouldn't be surprised if the Nifty kind of if it was to go downward, anywhere around 19,000, I think would be a good point to relook again. But at the moment, even we remain in this small trading range, but I think the risks are more to the downside, particularly because of the banking index.
That's the theme coming in at the index level. 19,000 is the level that you're watching out for. But Andrew, how are you differentiating between the entire urban discretionary theme? Because this quarter has told us that there are clear outliers both in terms of outperformance and underperformance. And today as well, you clearly have the instance of PVR versus Nykaa, wherein PVR is doing very, very well for itself, 5% higher, and Nykaa is languishing after a weak set.
Yes, well, I mean, I think in terms of, I suppose they're completely different kind of stories. There's kind of a lot of blockbuster films around, so obviously that's the catalyst for PVR. And of course, with Nykaa, I think, as you mentioned previously, there's been quite a number of brokers' reports which have not just downgraded their kind of ratings in terms of mainly from buy to hold. But also, big earnings revisions as well. So that's I think it's a different type of reasons behind both the share price rising and fall. So I don't think there's any correlation between the two. But what did interest me about just on the consumer sector overall was looking through. One of our themes has been beverages, alcoholic and non-alcoholic. Where we've seen that premiumization starting to continue to move in favor of the companies. And again, it's a long runway. We're at the start of this move, so I think there's going to be a multi-year benefit for these companies as people move more up the higher value chain, and we're seeing that throughout the results actually for most of them. So that's the theme that we think is the best way to play the consumer at the moment.
Commentary coming in from Divi's Labs post its numbers should bring up that stock as well for you and show you how it's currently panning out in trade. In the meantime, important to also highlight what some of the brokerage updates has been. Nykaa, for instance, that's clearly been a miss in the quarterly performance. BofA has downgraded it now to a neutral after the Q1 miss. They're saying that slowing growth, less valuation support, downside risks remain if competition pressure increases. Similar is the commentary coming in from Macquarie as well. They're saying the ad income weakness, discounting pressures, the profit miss in the beauty, although has been offset by better than expected fashion performance. But they are saying that near-term EPS growth headwinds from weak apparel demand definitely stay. Andrew, you think that, the competition, and especially from the mighty bigwigs, the likes of the Reliance or the Tata houses, that's going to weigh heavy on Nykaa?
I mean, wherever Reliance goes in, it's going to have some impact, and I think we're all awaiting in the financial industry, what they're going to do with Geo Financial. I mean, they've obviously mutual fund industry is something that would obviously keeping a watch on, but there's going to be many different areas. So, but we always know that the competition is going to be there, but it doesn't mean that you can't have 1 to 2 to 3 big players, as we've seen in the telecom industry. So I'm not necessarily say it's bad news. It just means it becomes more competitive, and at the margin, could be disruptive. So, but I think it's very early days. So it's not one of the factors. I think the factors that affected today's share price have been stockbroking downgrades to the ratings and earnings.
Okay, point taken. In the meantime, let's